going on, everyone? This is Tyler Coates, the co-host of the Honest Analysts, your weekly show for technical analysis about all things Bitcoin. And I am joined today by both of my co-hosts, Mr. Fibo Swanee and Joe Saz. I'm really excited to get back with you guys to see what you guys are thinking about the charts. Me and Fibo really got in deep last week about some things and missed having Joe's input about the order book, as that was one thing that I like to pay very close attention to, especially when the markets get moving. And I always like to get input from the people who are the experts in that area, along with the Fibonacci lines that we have been following so closely. So this week we are joined by the defending champion of the local disc golf league, Mr. Fibo Swanee. Took it down.
No, you got to remember it was the second level of the A.
Hey, we don't need to say this. You know, these are the parts we can keep to ourselves. But still, it doesn't matter. I mean, any level.
Hey, I still won. So that's
right. It wasn't the senior division. That's all that matters.
No, I was going up against some young players for sure.
Yeah, so congratulations there. Had a personal record, it sounds like, which is always very exciting no matter what you do in life. If you're, you know, passionate and getting out there and enjoying what you're doing and getting a little bit better and having those good rounds, that's what really makes it all.
Yeah, I needed to get a PR to actually win. So that's what was cool about it.
That's pretty sweet. So a very multi-talented person joining us here as Mr. Swanee, and as is Mr. Saz. It sounds like a man of many talents himself. So you were out there racing motorcycles this last week, it sounds like.
I did a bad job. I guess since you're bringing it up, yeah, I spilled and I slid for a long time, and I had my protective gear on, but damn, things are not great right now if I try to walk.
That sounds very painful. I am certainly glad that you are okay and were wearing your protective gear and wearing your helmet and whatnot, and are able to join us today. I guess you won't have to walk to provide your analysis this evening.
Yeah, no blood dripping from my ear, so I'm good right now.
That's very good. All right, well, Mr. Swanee, as you had been kind of leading us along here, would you like to get us started out so we can send it over to Joe after getting your thoughts?
Yeah, sure, no problem at all. Let me, you got to enable me for a screen share. I'm disabled.
I can do that. Security.
So I will show a chart when I can.
All right, you are enabled. I've granted you the power.
All right, good deal. All right, so actually you can see my full screen now, right?
Well, I was
yes.
So, Joe, it doesn't look like we can see the full screen.
On YouTube, I see his full screen.
You do? I'm not seeing like the prices, the what. Oh, okay, yeah.
I see.
Yeah, I don't see the full screen. So cool. We see it on YouTube though, so you're good.
Yeah, it's on YouTube.
Hey, awesome. All right, cool. All right, the Bitcoin USD. This is the 4 hour, and I'm going to show this one again because I've been getting a lot of requests from people to. They keep asking me, where's the next fib? Where's that at? Where's this at? So I'm going to go over what I'm actually looking at. I might repeat myself a little bit from last week, but I'm going to show you some additional stuff. So hopefully this becomes informative. I'm going to start back at the beginning here at the threshold. I always like to start where my main threshold is, and this was it. And that's when we broke up from the bear zone into the bull zone here on the RSI. And we had some momentum that backed it at that time. So this was the start of it. The next thing to look at is the red Fibonacci lines here. And these right now are currently at 38.2. Here is at 10.994. So basically about 11K. And then of course you got 10.3 down here on the 61.8% level. But the thing to look at is when you start to get retracements off of this, and this first candle came down here and broke this 38.2% level and wicked its way down here, and then came back up, and then it made many settlements above that line. So one of the things I look for is continuation of trend as long as the 38.2% continues to hold. And I also emphasize the 3-period rule. This is a 4 hour, so each candle is 4 hours. So you look for 3 candles that would close below it, and it never did. It only wicked and then closed up above the 38.2 there. So what that does is it leads you into this next area because you want to get a little bit more near term of what's going on. So what I do is I just wanted to look at this candle since it was just a crazy candle. So I took the high there and the low, and then found out where the 61.8% level is, and it's right there at 11,152. Once it came back up here, it didn't break until right around this point, 3 candles above, right here. It breaks the 61.8% level, going the other direct, or going, or basically holding, because it came back up here, and then it held going this direction for the bulls. Went up, came back down, and then tested this 11,152 again a couple of times, but didn't close down below it. So right there, it held support. So one of the things that I'm looking at is the zones down here in the RSI. And this top green zone, as this came down and popped back up, it came down to this point, which is the bottom of that bull zone. And as long as it held here and it held here, it's telling you that there's some good support at that level. Now, if it would have went down below that 38.2 and closed 3 times, most likely this thing would have broke down into the bear zone and got us into a little bit of bearishness. So what that leads us on is onto this next level. I'm not going to draw a line here, but up to this point and down to here is a 61.8%. But I want to move to a little bit more near term of where we're at. This low right here at 11,350, and then you go up to the high of 12,086. When you come down to this point, there was a 61.8% level right here at 11,634, I think it is. It came down to that point, bounced, and then kind of worked its way down, and then it broke just the other day or yesterday or whenever it was. It broke down, and then it broke all the way to the 100% level here at 11,350, but then it wicked all the way down to the 11,1, which this is another thing that I also look at for the Fibonacci is reversal points. And since this low to this high hit the 100% and then it went below it, the next range I look for is this reversal zone between 127 and 141. As this broke to that point, I put in an order at 11,150 and I was filled. I didn't buy a lot, but I bought some there because given that this broke down, I didn't want to buy too much because when you look down at the RSI here, it broke down into the bearish zone right here at this point. So this is an inflection point or a threshold in the market. But as you can see, one of the things is the market came down, bounced back up, and then in this bearishness right here, the market started to work its way back up. One of the things I'm looking for now is a move back above this red line, which is above the bear zone, which it's just starting to do today with this move, which is really good. The ADX is converging, so we're going to look for a cross there eventually. But right now, the main thing is this RSI is kicking back up above into the bull zone. And another thing that I like is if you take the high at 12,086 here, and then you take the low that it made at 11,149, and then you start working your way this direction, the 38.2 is that first level I watch to see if this is going to continue to trend to the downside or continue trend in general. Just like we were looking at over here to go this direction, we're going, now that we're in the bearish zone, we want to check this 38.2 to see if it's going to hold to keep us bearish. But what happened is it popped back up above it, above this 38.2 here, and closed 3 times, and now it became support. And then as this came down, it kept testing right at this point, and then we've launched, just in the last 4 hours, we had a nice candle to the upside. So all this support right in here is kind of an area of consolidation. And as you can see, it pops up into the green zone, but it's really not a signal for a bull zone yet until it gets out of the bear zone. So when it pops back up into this, usually these zones in here are neutral, kind of an area of consolidation possibility. And then as it was holding this 38.2, you can see it's kind of been holding that new bull zone, but it hasn't confirmed yet. And I'm waiting for that confirmation, hopefully on the close today. And then we'll look for 3 closes above 11,720. And once we get those 3 closes above there, then the support that's at 11.1 will move all the way up to 11.7 and then work our way to the upside. So right now it's looking pretty good. We're going to close here in about 15 minutes, I think. And hopefully we'll close above that 61.8%. So we'll get that first close on the 4 hour. And then hopefully we'll get that RSI right there. So if that happens, and we get in by morning, 8 hours later, if this is still above 11,720, you might see some more buying interest to push this thing back up to the previous high. And then eventually on the same route that I've been waiting to get to is that 13.8, which is that previous high that you'll see on some other charts. But that's where I'm at the moment on the 4 hour. So everything's working pretty well when you look at the fib levels here. But then when you pop open to the daily, the daily's threshold was right here. We're well into the bull zone still. It bounced off the bearish zone. It has to get all the way down below the bull zone here to get bearish, but it shows you that there's a little bit of minor support in here, and that comes at a 38.2% at 11K. One of the reasons that I bought at 11,150 because it came down to this area right in here, and it wasn't getting anywhere near breaking out of the bull zone and into the bear zone. And so this 38.2 that we're at currently is at just about 11K. And that's the continuation of trend that I'm looking for on the daily. And then when you went over to the weekly on the threshold, the 38.2 is at 11,140. Another reason why I liked buying 11.1 area is this came down to the 38.2 on the weekly with no sign of, I mean, this is a weekly, so it takes time. But this was the spot at the 38.2 for continuation of trend is at 11.1. So this weekly, along with this daily at 11K, and then also this 4 hour holding that support at 11.5, all of that together has kept me long in the market and not getting out of any of my longs at this point in time. Now this move to the downside was a little scary. Don't get me wrong, but then if I keep to my plan and keep to what I do looking at the fib levels, it helps me take that emotion out, and I have a lot more confidence getting in at 11.1. And of course, could I have been wrong? Of course, it could have went right through it like so easy. But as long as I stick to what I do and I put out the order there, most of my stops were going to be 3 closes below this 11K area on the 38.2, because 3 closes below this level, any of the longs that I've been buying would be a good spot to take some profit for sure on that. And then most likely you would see a drop from here to 10.3 pretty quickly if that happens. So my stops would be on there on some of these upper buys. My stops here, my long-term buys from all of my thresholds, I have at 10K. A lot of stuff is right at 10K. I bought puts at 10K to that's my stops for almost all my longs, not to where I want to get out because I want to preserve my capital. I use the puts as my stop so I don't have to sell my Bitcoin, put it that way. So that's what I got, guys. If there's any questions or anything. I know I covered a lot in about 10-minute period, 15 minutes.
Yeah, that was a hard slam of info.
Yeah, there's about 15 questions before you move to the second chart. So I appreciate
All right,
you.
shoot them my way. Shoot them my way.
Quickly. Well, the questions that I have to ask, I need to hear the answer to, and I also need a refill of my drink. So I want to ask a question that the audience will like to hear in terms of, you talked about buying puts as a stop, which is, I think I kind of get the idea. We had a conversation a while back, and we talked about protective puts, which is more buying puts as a hedge in terms of we
Yes.
buy Bitcoin and we go long, and then we buy puts on Bitcoin to hedge that long, and we basically hope that our puts expire worthless, such that our long is then in the money, and therefore it's kind of like taking out insurance on your bet. And if you're betting in a highly volatile market and somebody's offering insurance at a reasonable rate, it seems like it's something that people should understand, or at least take the time to look into. So could you just give a quick, just a quick overview of how you do that, and the importance of doing it in low liquidity markets where there's so much slippage?
Yeah. I mean, the main thing is I'm looking at main thing is I look at for my fib levels first, and based on my threshold here, the current level is about 10.3, but then on some of these other levels, I don't have them all drawn on here. Maybe the daily shows it. Let's see. No, the daily doesn't show it that well. Yeah, no, I don't have the chart to really show it at the moment. But what I'm looking at is even off an extension here, it shows a range of 9.8 to 10.1. The 10K for me is based on my book. So all the things that I've been buying since the low at around 3,800, based on all these movements to the upside, that level was really good for my risk reward that's going on. So I picked the 10K level when we got basically as the market was moving up to about 12K or so. Not at this point. It was more along the lines of this point as it worked its way up. As the price goes up, the cost of those puts go down. So it makes it a little more less insurance policy cost, you could say, on those. So if you just go into a place that sells options, and then you buy the put, the 10,000K put, and I have that for, I believe, September something. I can't remember the date off the top of my head. So I have that set in there for at least a month. But I do it when you get the nice rallies to the upside and you get really strong resistance levels. And if you find that area that you want for a stop, it's at 10K level for me at that point in time. So as we rallied up to 12K, the puts become cheaper. So I can buy a cheaper insurance policy. And what I do is whatever amount of Bitcoin that I have bought, that I have on my trading platforms, not my cold storage, I'm talking just the stuff I'm trading with, I'll go out and buy an option, a put option for every Bitcoin that you want. And you can also buy it in portions too. So if you have a half a Bitcoin or a quarter of a Bitcoin or whatever, you can buy that portion of a put to cover yourself if it drops. So when it does drop to 10K, and if it does go lower, if it drops all the way down to 9,100 or whatever, you can actually buy the put back or sell the put back to make the profit off of that move, and then preserve your capital and keep your Bitcoin. So I think that I'm hoping I'm answering what you're asking. I don't have anything to show at this point in time. I can always put some.
Oh yeah, that's great. I appreciate it. And one thing that you mentioned that was one of the most important things I learned from Tone Base's option class, which I've recommended to anybody that has asked. Really great class with a lot of good information. One of the things he really hammered home was the idea of carrying options that have at least a month until expiration, and Fibo touched on buying a month's worth of time, which that's one thing that I understand is critical, is that time decay really falls off a cliff after those couple of weeks.
Yeah, exactly.
So we don't want to
it's September, but I can't remember the date. So it's about a month away, somewhere right around there.
And so, yeah, I guess we don't want to get too far into the options for now, but I appreciate you explaining that. Next quick question I had for you, hopefully we don't go too long, and you highlighted the two kind of longer term fibs at 10,900 and 10,300. And based on kind of what you've been saying, is you expect continuation if the 38.2 holds there at 10,994. So my question is, at what point do you turn bearish? If the 38.2 breaks down, do you then turn neutral and then wait and see what happens at 61.8 and turn bearish if that gives? What would be your line in the sand to think that this is no longer going to continue?
Yeah, the things that I do, and this is, this is not financial advice, it's just kind of risk management on my part, is from this threshold, working our way up, and we've bought different areas. So the thing I look for is, of course, the 3-period rule. And a lot of times I would look on the daily more than the 4-hour, because the 4-hour is going to be a little bit too close of a time frame for my major type of swing trading. So on the daily here is what I'm really kind of looking at. And this 11K here at the 38.2, if I got 3 closes below this level, and there's some momentum behind it, and there's some other indication, what I'll do is I'll probably exit about 50% of it, of what I'm considering getting out of. Because most likely, if you break that 38.2, you're going to have a pretty quick candle back down to at least the 61.8%, which is at 10.3, which is a pretty significant level on various different charts. I know one of them that you've looked at, Saw, is right around that level on the downside too. So if it gets 3 closes below the 10.3, I'll probably get out the other 50%. The 10K is for my longer term stuff. If it falls out of bed. But that the 10K is in puts, because I feel like if it gets to 10K and gets below it, then a move all the way to the full retracement at 9,100 here could come into play. And if momentum gets really strong, the reason I have the puts is if I can see it shoot all the way down into the 79 to 8,300 area, which is a fib extension off this current. It makes a new low below my threshold. So I kind of take it in stages. 50% if it breaks the shallow fib, and then I'll break another 50% on the ones I've bought from 9,100 up, basically. This whole threshold area in here.
Do you have a name for that 61.8? You call it 38.2, the shallow fib. Do you have a name for that 61.8?
They already named it. It's called the golden ratio.
It doesn't have quite the name. I've been just referring to it myself as the critical fib. Like that for me.
Yeah, no, that's a good one. That's a good one. Yeah, because really the 61.8% level is the key psychological level to me, because if you're a buyer in this market and it breaks that level, a lot of emotional traders are out there and they get all spooked like super fast. If you're long on this at 10.3 and it breaks to the downside, you'll get a lot of selling interest. You probably have a lot of stops just below there. And a lot of times I look at it as a psychological level. So you got a bunch of longs that are along that battle line. And then all of a sudden the sellers are starting to take over. So they jump ship and they say, okay, we need to establish a new camp or a new line or a new battle line somewhere else. And high probability is it's usually a full retracement. In this case, it would go all the way down to 9,100 because that's the full retracement off of this that we're looking at. So the buyers would jump from 10.3 and reestablish at 9.1. And most likely you'd have a really strong wick to the downside, or at least a candle to the downside, because all that buying interest just moved from one area and set up camp in another. So to me, the 61.8% is a really psychological level, because it's one where it plays with your wallets, and because there's usually a lot of stops around that area and those kind of things. So critical fib, I like it. I never really called it that, but it makes sense.
Good. I'm glad that you approve. Potentially we can start that terminology. Last question for you quickly is going to be one thing that jumped out at me as soon as I saw it. I had to kind of pull up some different charts and make sure it looked the same on other exchanges because I didn't realize that daily ADX had rolled over. And when the daily ADX rolls over above 60, it makes me sit up in my seat. It really calls for, in the best case, if you're bullish.
What time frame are you talking?
On the daily.
On the daily? Okay.
Yep. The daily ADX rolling over above 60 calls for an exhausted trend. It says that we should probably reverse from here or enter prolonged consolidation. The last few times that we have rolled over above this level, we've done exactly that. So that is the one thing that would have me concerned at this stage. Any thoughts there?
Yeah, I mean, I actually read it just a little differently, but I get what you're saying, and it makes complete sense, and I agree with it. But one of the things I take into consideration is the rates of change of the actual directional index lines themselves, and I apply it against the rates of change of the ADX. And as the ADX is dropping here, yes, the positive directional index is moving up because price is moving up, and there's less momentum for the bulls at this time. But as the ADX is dropping, basically it's not a divergence here. It's where it's the bulls are back in control a little bit, and to the downside. So to me, it's just when it moves from this it's right now it was topped out around 42 or so.
Okay.
As long as it's in the 30 to 40 range for me, it's still in an area of strength for trend, but it's just slightly diminishing. To me, it would make more. I would get more concerned if it broke down below the 30 level, as the prices were consolidating here. But even then, it's still telling me that there's not enough momentum to switch the primary trend over from the bears to the bulls. But it does give you concern that it could push down to some levels, which I think it did. It went down to that 11.1 or so, which brings us into a spot that gets concerning. But my main thing on the ADX is I got the 0 to 20 is basically nothing. It's kind of no trend. You got the 20 to 30, which is I'm using just textbook here. 20 to 30 is more of your trend building, your strength building time. And then your 30 to 40 is your exhaustion. So when you do top out, like you're saying, it is a red flag to say, hey, let's look at some other things because this could retrace back to certain support levels. And in this case, it did retrace back to the 11K or close to it. And that was that first spot I would look for. And since the rates of change on the day over day on the directional indexes themselves weren't coming to an area of crossing, to me, it was saying the bulls are still in control. So any support that you're looking at that has validation for other reasons, that would be a good spot to put your buys in. And that's when I threw out the 11.1, knowing that a lot of this is still showing a lot of support, even though it's starting to lose momentum. And another thing is on the 4 hour that I kind of noticed here is when the bulls are in control, when it broke this trend line or broke the levels to make that move down to 11.1, the ADX is increasing and the bears have been in control, but the bears haven't broken any major support that I've been following at all. So that divergence right there is actually kind of hidden bullishness in the market for me, which also brings me a little bit more comfort to buy on the drops. So all of that kind of working together is what I kind of look at when I look at the ADX. But I definitely agree with you. Once it starts coming off those highs, it's a red flag, and it's basically a red flag to say, hey, dig in and look at some more analysis and see if this thing's turning over.
All right, beautiful. Thank you so much for sharing all of that honest and excellent analysis. Now, I think it would be a great time to turn it on over to Joe Saz as the market has just started to move a little bit. That 12K may be incoming as Fibo was talking about here just a few
Well, we
minutes.
got the first close above the fib level that I'm
Yep.
looking at.
And
But
then
that doesn't.
strong
It'd
reaction.
be good to hear the order book because it'd be interesting to see where all these.
Yeah,
sellers
I think you're gonna like what I have to say, Fib.
Okay, cool.
I'm hoping. I'm hoping so.
Let me get off the screen here. Let me stop share so you can show us some stuff.
All right, you guys ready for a party?
I'm always ready for a party.
All right. So, have you guys heard me mentioning the gold mine?
Oh yeah.
So the gold mine, I think we saw it begin at around 9,600, and that's pretty much where the party started, right? Now, this is the really interesting thing to me. This low 11,000 range has been checked, like, repeatedly. The gold mine here that just got checked, right? Obviously, we weren't showing gold until we fell through the floor, but clearly there was a lot of gold mine support. We checked that zone. I think this is what Sawcruteez and Fibo would like, is an area of accumulation. This is how I'm reading this, that people are stacking the book. They want their orders filled. This is now the flip side. This is bulls in control of the market. They might have triggered some little shits up here that caused, a massive meltdown because there was no liquidity at this time. At this time, liquidity in the book was only around 5,000 bids and asks, 5.8 or so thousand bids and asks, down as low as around 4 point something, and 4.1 through the dump. So it was just a very illiquid book, and it was easy to really trigger a massive move without much action because, again, the book was just so illiquid. So you can see that in this gold mine area, even in of course, even slightly below, we've been accumulating. People were accumulating like crazy. Then the gold mine kicks in again. Face check it a little bit, and you can see that the gold mine held because as we face check it, this zone is now getting pushed, and we're pushing this 2.5 to 5% band now becomes the 1 to 2.5% band. So that meant that this was static. The orders in the book were static and they wanted to get filled. When we pushed down and tried to beat it, we couldn't. And as you saw, the gold mine came right back up, which means all of those orders didn't get filled. So the gold mine comes back into play, right? You can see it just on the horizontal. You see the gold mine here. You see the 1 to 2.5 band. I call it the king band. And then we move back into the gold mine position. Obviously, some scalpy McGee stuff up in here. But gold mine running us through the whole way. Now, I think we recently had a little bit of another check, right? So we had bids all up in this range from the low 11,000s all the way up, creating the gold mine. So in order for us to, for me, like, to really believe what's going on right now, it feels like people are just trying to collapse the price into the whale accumulation zone, which is the low 11,000s for whatever reason. That's what it is right now. And maybe Bitcoin's on its way to fucking $1 million. I don't know. But what I do know is there is some serious interest that has not been wavering and it's been very consistent at the low 11,000 range. Now, tap, we triple tap it a little bit. You can see we had some great signals, another light up, a triple band light up here. So the 0 to 1% band gave us a signal, 1 to 2.5 and a gold mine. So this was, a really rough time. I think this was a great bottom. Beautiful, beautiful bottom. And you can see that we just kept having consistent support along the way. So I believe that the low 11,000s have been an accumulation zone, and we're kind of doing some things that are, we're shaking out a lot of weak hands right now, and that's just going to create a situation where we blow the roof out of the building. I'm a little. I'm not really picking much of a side, even though I feel bullish. I'm a short time scale trader. I need to stick to what I know, right? It's my expertise. It's where I feel most comfortable. It is what I do, so I don't want to say I'm like super duper bullish right now, but the fact is the gold mine's been lit up. It's been checked repeatedly and it's been upheld. Now, the 11,000s are the new low 9,000s. We're consolidating again. I think it's very possible we break out. And the book hasn't stacked up too heavily to the upside. Clearly, people think that 12K is a top. I think we've hit it twice. Spent some time above 12K twice now. So there's a little bit of a stack up here, but it's not really that powerful. And keep in mind, like the proximity between the breaks of 12K were pretty close in time. Here's the first one where we snapped right back down, and then we came back up, spent a bit more time up there, and I have no reason to believe we're not going to get up there again. But I am a little concerned that sellers are starting to get a bit more serious. We are producing these ratio results that are giving us some good signals. And I am taking and trading a very technical game right now. You know, I don't want to talk about too much, but you know, the got a lot going on, right? Have some baggage going into my trades, you know, injured and stuff like that. So right now, more than ever, I got to trade with the cleanest head on my shoulders. And so I'm just playing my technical game by my rules. And, you know, if I get a short, I take the short. If I get stopped out, I get stopped out and I'll wait for the next trade. But no gold mine right now, little bit, you know, unfortunate. And we're getting a lot of short signals. We did push to a new high above where we got the purple signals, right? So this is a very important signal to me, this purple. And the high at the time was approximately 11.8. Now we've broken that. So, and we don't have a purple signal anymore, which means buyers are chasing the book. We got a 73 pack running us at 11.8, flat, a 35 pack, 2 aggregations below, a 109 pack at 11.75. So it's looking pretty serious. We're starting to stack the book a little bit, you know, in the 0 to 1% range to create a little bit of support as we run this thing up. And I saw us running up with far less liquidity through far more liquidity. So I really don't know what to expect. I'm just going to play a technical game. Yeah, I know you guys have your 13K directional targets, but and I see 11K as an accumulation zone, which means clearly 13K is a reasonable target. But right now I'm just a little concerned. You know, I think the market's a little hazy, and I'm just going to be playing the short-term trades. But I do feel that 11K has been a great consolidation. I think that does support your fib levels there, Fibo. And I mean, me being neutral in that sense and you being bullish and us kind of confirming the same zone as an accumulation zone, that leans me, it adds an extra point. I went from 5 to 6, you know, on the bullish spectrum. So I'm happy to see that there's a little bit of collaboration going on. And I did take a tiny short. I do have a stop loss ready to get in play. Small trade, you know, 0.25x, maybe a little less. I'm just trading to get back on my feet right now, you know, clear my head. But again, I just wanted to bring up that psychological element because Fibo's talking about psychological levels and all this stuff. I'm talking about the life of a trader isn't always fucking, you know, sunshine and rainbows. You know, you got to get your fucking shit together. And sometimes when it's not, you got to trade with less money. But otherwise, you're going to lose it all. So right now, I'm just getting, you know, my feet back underneath me. Small trades, low lev, and technical game. That's according to my rules as I have defined them, and that's pretty much how I see the market right now.
Yeah. One of the things I've kind of noticed when you're looking at this is when you're talking about the gold mine area. One thing that when the gold mine was starting to stack around that 11,000 or so, that was at the point in time when the internal momentum indicators were increasing for the bears, but the price wasn't dropping. And I kind of noticed that bullish divergence in those indicators at the same time the gold mine is getting built. I don't know if there's any correlation there or not, or something that we can look into later, because I know the math behind those derivative indicators are not the same. But it would be interesting to see if there's some correlation there or not.
Yeah, I'm not getting anything off the top of my head. Normally, I'm pretty good on the fly, but that's one that I'd have to think about.
Yeah, I mean, I definitely think that there's a correlation there for sure, and that's something that I would pay close attention to. Like you just mentioned, I didn't notice that on the technicals on this last pullback, but kind of maybe had the feeling that potentially, like a lot of times in Bitcoin, oscillators and stuff like that will get overbought, and it will be when Bitcoin makes the biggest moves is when it's already overbought. And what happens, the only way that that can happen in my mind is if it gets overbought, but support just keeps moving up. So it just doesn't matter how overbought it is if support just moves up. And that's a good example of where we smashed through 10,000. And myself, I had bids that didn't get filled. I was looking 10.3 down to 9.8. None of them got filled. And the reason is support moved up. And I think that that's what is so important about the order book. If you are able to, kind of eliminate some of the noise and really distinguish where the support and resistance is that you can see when the order book gets really bullish after a move that support is moving up, and therefore the sell signals and the oscillators are just going to be really buying opportunities.
It just shows a lot of psychological follow through in the move in terms of FOMO, the strength of the move being very bullish, people really wanting to get in on the action. That's kind of what the gold mine represents, right? So it's really good when that does come into play. It's not a sure thing. It certainly has been a damn good thing. But we've checked the low 11Ks a couple times. Let's see if we can pop our way to 13K. I'd really appreciate that, because gold mine's supposed to mean buy, motherfuckers.
And that's one thing that I really like about that gold mine signal, or some of the signals we've been seeing recently, is my favorite signals out of the order book, which are the rarest as far as I can tell, are the ones that go in line with the move. And if you have a breakout and then you have a buy signal, well, it's like, holy cow, this is a real breakout and one that probably has some real legs. So the signals that I really like paying close attention to are those ones that follow significant breakouts, and seeing that that's what we've just recently seen is definitely significant to me for sure.
Yeah, and gold mine is very rare, very rare. I can't believe it's even lasted this long. Very rare. So anyways.
That's perfect for such a rare time. Halving only comes around every so often, and this is exactly what I would be expecting to see, is some massive shakeouts following the halving, and then some massive demand pushing the price up in a big way. So that's exactly what I was hoping to see, and glad that I think this may be the first week where we're all on the same page. I mean, if you want to call 11 to accumulation, then it seems like you would be looking for higher prices, and anything under 13. I mean, we're looking closer to 14, 13.9, 13.8. Anything under 13 would seem pretty darn conservative. So I feel comfortable saying we're pretty much on the same page. Would you agree?
Yeah, I feel uncomfortable giving a price target, but I have been saying, or thinking at least 14 to 14.5-ish is my target zone for us to pump to. I think the market tends to be a bit more irrational on the buying side when we break out. So I'm leaning a bit higher, but clearly, we can stop along the way. So I don't think this thing is going to run out of steam until the 14Ks, and that's going to be my reevaluation zone.
Beautiful. And I guess I definitely don't need to put you on the spot with providing targets, because as you said, your specialty is scalping, and that's definitely what has impressed me most out of you. And scalpers really don't give a shit where the price is going. Therefore, it only hurts them to start to think about those sorts of things. It keeps them from really taking the signals and just getting in and out. So that is definitely what I respect most out of you. And if you don't have a price call, but you do have a trade on the table, I mean, that's as honest as it gets. All right. Well, I guess with that being
best for last.
Well, we'll see about that. I saved me for last because I know everybody's tuned out by now, so I can go ahead and get into my mumbo jumbo with. There are some things that I'm definitely keeping an eye on with EMASAR, so we'll go ahead and share my screen. You guys will have to make sure that everything is looking good on YouTube's end. I mean, that's a bullish chart right there. Our viewers, I mean, maybe we did save the best for last. Who knows?
Mm-hmm.
All right. Let's see. There's a lot of charts going on here. Let's do a drawing board. Perfect. Okay,
I'm
yeah.
looking at your YouTube, your screen share on your YouTube. Cool.
Good
There we
now?
go. Yep, got all 4.
All right, as I have it up and loaded, I guess the first thing, just take a quick look at kind of what I was seeing out of the ADX, and I guess it must be different on different exchanges. I couldn't see Fibo's full screen, only YouTube could. And I did I fully agree that 30 to 40 is the area of strength, but once we get over 50 and roll over, that is when I get worried. And if we just kind of take a look, that's happening right here. Last time it happened was right here. And as I mentioned, you know, consolidation or big reversal. Here it happened very near the bottom. Here, notice how here it was peak, you know, it hadn't even crossed this, but once it rolled over, now we're really starting to get near a top, and this is where Fibo would probably be paying attention to it, breaking down 30. Here was a spot where we definitely continued the bearish momentum down, but we got a record move in between with this big spike up after that rollover as that was working its way back to zero, and kind of getting back to a healthy spot at that massive spike. So that is potentially what I would be hoping is that we have something like this. And as a matter of fact, this was the exact fractal that we looked at last week. So it's pretty interesting to see where the ADX is in relation to the fractal that we were looking at. I am just now noticing that, and that makes me feel significantly more comfortable about that ADX. And that is kind of one of the things that we're talking about, is that some of the times that the oscillators get into a sell and then the price goes up is going to be one of the most bullish times. So here we were clearly peaking. We were over 70, way more exhausted here. I mean, that's a big sign of exhaustion. It rolls over and comes down, but the price just keeps moving up. And this actually turned out to be a very good fractal to pay attention to. Last week, we were kind of right around here. And I was saying to kind of keep an eye out for a test of the highs and then a sharp dump down to support. And that's a beautiful arrow there. But hopefully you get the idea, and kind of keeping an eye on this sort of higher low, higher high sort of situation that I mentioned was just very unique. When this was the first time I'd kind of seen something like this, and I very much thought this was a top. And when it wasn't, it it burned that image into my mind for sure. So last week we pulled out a fractal of that and overlaid it and whatnot. So go ahead and take a look at that if you're so inclined. And now we are getting a, we probably compare it on the 4 hour like I like to do, but we did get a very good play out from there. So here's the 10th last week, I guess would have been, I guess, was that when it made sense, it was all the way down here, but I guess potentially, because we do the show every week. So somewhere down here was looking for a run up to test the highs, just after seeing this move here where we had the kind of bull flag run up, blow off top that, you know, again, kind of gave us that trend line. So I've been staying on top of this as best as I can, definitely buying, not getting as good a prices as Fibo there. I did mention now I bought 11.2 over here after not getting filled on this. My first order was 10.3.5. And then I did add on this move down as the pattern kind of continued to play out nicely. And now we do potentially have, as this didn't create a higher high, it's given a more normal setup that is something that I will absolutely be paying very close attention to. Ascending triangles and bull markets are about as good as it gets for me. And I would say they're nice, especially in Bitcoin with all the FOMO and stuff. Once we maybe break a 0.618 or something and people get real freaked out, that's when things get interesting. So I would say that this is an ascending triangle for sure, but it is not confirmed. So therefore it's, you know, basically worthless until it confirms. So I would be keeping a close eye on a 4 hour close above. Oh boy, just lost you guys. Hopefully, looks like the Zoom's still going.
Yeah, I'm listening.
Yeah, I can see it.
good news. 4-hour close above 10.15, 10.17. I would say would confirm this, and I would wait for a close and just wait, to make sure it doesn't immediately react back down. So maybe give it an 8-hour close. I wouldn't necessarily wait for a full daily close. I like the 12-hour closes. I like 4-hour close and waiting for a reaction. So I am very much seeing reason for this to continue as outlined last week. I don't need to rehash everything we went over last week. Just want to cover anything that maybe is new or has changed. But target from last week was 13.9. If this does confirm, it hasn't. But if it does, then we would want to measure the move to get an idea for what that may be looking at. So now it's coming in at 13.2. So I'd start to maybe get a little bit more conservative in terms of if I have a target that is giving me a price, target of something like 13.9, and then I get a new target that gives me a even closer number, a more conservative number. Well, I'm going to use that. I'm going to use both of them. I'm going to take both of them into account, absolutely. So the highest target is from this big bull flag that I would be looking to layer, some orders, as Fibo kind of mentioned, how he will scale in and out with, not his full position all the time, or maybe any of the time. I rarely do. I would be looking to set some orders, and when we have something like this, I'll kind of set 2 orders up here, such that if that highest one doesn't get filled, and this would be a situation where it matters how fast it takes to get there. If it gets to these prices in the next week or 2 or 3, absolutely, I want to be trimming in a heavy way. If it takes
what is that price there, Saw?
This range, this top range would be 15.4 to 15.8, based on this kind of, if we could call this a bull flag, bull pennant. Then that
my fib extensions are at 17.2.
Okay, very interesting.
Pretty close,
but that is going to be the top level that I think the most critical area is this bounce. I think we covered this last week. This level right here is my absolutely most critical area, which it sounds like is,
what is that?
Very closely in line with you. That'll be 17.2 right there.
Okay. Yeah, because that level right there matches up with some extensions off the high off of the July, or I think it was the July high. Yeah, somewhere around. When you extend that as it makes new highs, it kind of matches up with that pretty well. So that whole 15, 15.5 or so to 17.2 is a great range to look for. 13.8 breaks.
Very interesting. So I'm glad you mentioned that, because the only thing I was looking at was this lower high that we created back in 2018 after the major top. Is for this to get a lower high here, that means that there had to be a huge amount of selling pressure and also a huge amount of buyers there. So I would view this to be a high, the last high liquidity area after we broke through 10,000 is really going to be 17.2. And to hear that fibs line up with that's very interesting. And so yeah, that's what I would be looking to do, is be setting some orders based on this pattern here. Might as well have the orders set, because if the orders get filled, obviously it confirmed, and if it doesn't confirm, I can always cancel those orders. So having that target line up with this high that occurred right here on July 9, it's like the if we're looking at the ultimate high in December 17, we had a high and then a dump and then a lower high. So call it a phase 4, 5, 6, 5, 6. It's like the mini version of that right here, where it absolutely was a hyperwave fractal with your 1, 2, 3, 4. And then you have the 5, 6. And then if you were to draw a horizontal at that high, it is exactly in line with the target from the brand new pattern that just got created. And that's what blows my mind, is how patterns will get created to kind of, I don't know, sometimes just point towards where to set your orders, and often it will line up with previous horizontals, and that's when I pay attention. When the patterns kind of don't line up with anything else, I don't pay too close of attention. And then the other 13.9, 13.875 is right at the peak of that run up in June 2019. So that is going to be where I would be looking to take some profit from here. This is going to be what I would view as reaccumulation. Generally, when you have a long consolidationary period, which this was, we had record lows on volatility, you know, Bollinger Band squeezes, the whole 9 yards, very long period of consolidation. When that happens, generally the first breakout, whichever direction it goes, that consolidation that follows is the reaccumulation or redistribution if it went this way. So I would always look for the move that follows a long consolidation to, when it first finds a range, for that to be the reaccumulation zone, and then for after that to be the profit taking area. And that is going to be my main approach, as I will continue to try to pay close attention, and that can change very quickly if we do happen to break down my key level here of 10.526. Now I'm going to be looking to exit a good portion of the position and potentially re-enter at some better prices. And this is the horizontal on the daily, which we can see served as great support back in here. And as that continues to stay above that area, I continue to feel like we're in a very good position to move up. And it would very much kind of confirm my read of this being reaccumulation. If this consolidation occurred below this horizontal, it would very much negate my read. So that is a very good sign that we are continuing to stay above that horizontal, but things could change quickly if we fall below. And I am continuing to just pay very close attention to that fractal that we covered after gaining some nice support off of the trend line. Then the next step from that fractal would be to take out the highs and throw back, and then to sharply move up. So that fractal pattern does line up nicely with the targets for sure. And if we were to just extend that first consolidation that occurred back in there, there were, you know, two legs that followed, which is interesting to think about. If we go ahead and delete that. So right here, you know, this was the fractal we're looking at. If we want to just, you know, induce that is what may follow, maybe there's two legs, and potentially that would make sense kind of with the targets. Oh, you got to be kidding me. The arrow is the only thing on TradingView that doesn't reset. After you draw the arrow, it stays there. Every other tool resets after you do it. Okay. So just as we had lined out the two horizontal zones and gotten stuck on the arrow, that thinking potentially, you know, something like hit that first one, maybe a little throwback to that horizontal on EMASAR that we were looking at, and then, you know, something like that. Of course, that would be my hope. As I mentioned, the horizontal on EMASAR, that's coming from right there. And that is going to be, you know, what I'll be watching for, but it's nothing more than an idea to keep in the back of my mind as I let the market tell me what it wants to do. And right now, what it's telling me what it wants to do is retest these highs after it retested the lows and put in a higher low. And if you retest the highs 3 times after having higher lows, that's an ascending triangle, and that's you know, the market's speaking loud and clear to me, and whether or not I want to listen to it is up to me. And that is what I hope to do. So just another quick look at the shorter term critical areas. It's, I guess, a good time to be looking at this as I did actually get myself a nice little fill on that on a shorter term day trade. The horizontals I trust very much on all time frames. As we were looking at the daily, I would be looking at it very much on the 15-minute and other time frames as well. So as I mentioned, this may be in a good time. I just extended this one because as we support this one, then we would look for price to come up to this one right here that was printed back in here and test it. And when I see these kind of so close, it looks like a kind of good area for a range. And that is kind of, I guess this isn't really a range, but it is, potentially an area to look for a little bit of a pullback and a return to support anyways, as it's trying to peek its way above the channel that I would draw in, connecting these lows and these highs here. Potentially that would just be the little head fake before it moves back down. So as you see this green line here, I'll zoom out to just kind of show where that comes from. And that would make me very interested in buying back a little bit. As we were on the show, I did just get filled here on that trim. So now that I've trimmed, I would be looking to buy back, and that would be this is the 15-minute chart. So shorter term. This isn't the swing trade as I have been talking about, and hopefully not confusing people. When I'm looking at the 4-hour chart, I'm looking swing trades, talking 13.8. Prices. When I'm looking at 15-minute, I'm looking for like a $400 or $500 move. And that's what I will be doing on a daily basis. So here I am seeing that if we did kind of come back down to 11.54, it would be a big confluence of support from the beach that we have right here. It's kind of started to move its way up. And then I'm starting to draw on this trend line here, which I do trust at this point. And then if we just go ahead and zoom out, let's get off EMASAR, just kind of see where that trend line is coming from, see how important that may or may not be at this stage of the game. And that is what I do think is pretty important, as it has been continuing to follow along that area. And actually what I'd be more focused on here is going to be some horizontals. So apologies if that got a little bit confusing, but I think this is a good spot where, so we create a higher high. So now I would look for, a throwback to horizontals, and always what's more important to me than trend lines is horizontals. So I'm gonna go ahead and delete this and say that, yeah, these trend lines here, I'm gonna pencil them in, and they are going to remain relevant to me as long as price doesn't like completely blow it out, like come way up here. As we see, potentially it could be given that head fake above and coming back below. Nice to see that horizontal remained important. But from here, I would view this as a very interesting opportunity because we have been working on these higher highs and higher lows. And if it gives that up, if it gives up 11,000, then there's no need to continue to be in that position. So if we're entering at 11.5 and our stop's at 11,000 and our target is a return to, maybe 12.2, risk reward isn't great, just a little bit better than 1-to-1, but that is where I would absolutely be just looking to trim and potentially hold for higher prices, as it wouldn't be a swing trade. If I really do think there's good reasons to hold for higher prices, I would be looking to trim shorter term trades and hold 20%, not much. If I, for example, enter here and the price does move up here and I exit 80%, what I would then do also is set a stop loss at break even. Now I've got 20% of my position left, and I've also basically locked in some profit. And if price just shoots out I've got exposure, and I'm a happy camper. And if it dumps, then I'm still a fairly happy camper. So that is going to be my short and long-term analysis. I guess the last thing that's kind of jumping out at me here is a pretty nice big W pattern, which is certainly something I pay attention to. And this is a particularly nice one because it's a higher low. Most big W's, you're going to see a double bottom. And when you have a higher low, I've heard that referred to as like a flying W, and I kind of like the term. And as a matter of fact, we've had a handful of good terms today. We started with the critical fib, and then Joe brought us the what was it? The King Band. I hadn't heard of the King Band.
Yeah, that's the first time I heard that too.
The gold mine, I'd heard that and I like that, but I didn't know about the King Band. So yeah, we've got some good terms here, and potentially a flying W, where if you have a big W that is, and now confirmed for sure, if it is with a higher low, it's definitely more bullish. So I am looking for higher prices, viewing this as the first consolidation after the breakout of a prolonged range, which should be the reaccumulation. And I am continuing to look for 13.8, but I'm also going to be looking for 13.2 as a good area to start trimming. And that was a little bit longer than I wanted to take, so that I'm sure will be playing for us today.
Well, I got to throw an ETH chart out, man. Give me 30 seconds.
Almost totally forgot about ETH. I don't know how I could do that.
I got way too many requests for it today. I got to throw it out there for at least 30 seconds.
Do. And this is a treat for people that watch all the way through. We may hit you with a last minute altcoin chart, which is not the point of the show, but we do like to give maybe a little special treat to those that are watching all the way through. Last week we took a look at Link and I think had some good charts to share there, and I think everybody's going to be very interested to see what you got with ETH.
All right, here's the ETH chart real quick. It'll be about a minute here, or maybe a little. Hopefully not that quick. But the what I'm looking at here, this is just the daily on Ethereum against the US dollar. A couple of things that I was looking at is this break of this trend line right here. This was my most recent threshold on this break of this trend line. And a couple of the areas to watch, because like one of the things was this move right up here, the 38.2 and the 61.8% held here, and then it busted. Then we got into this consolidation range and it broke to the upside. It went to a new high of 288.70, and then it opened up this area right up in here, the 127 to 144 that I like to look for possible reversals on extensions. It went up to that level, which is also the 38.2 when you look at it longer term, because this level right here, if it would have busted to the upside, it would have turned bullish here. But since it didn't, it kept the movement to the downside and kept the bearish, longer term going. But here's two things that happened. We broke above this 38.2, which is this longer term look, and we also broke above the extensions. So both of those in confluence with the latest move, we pop up, we come back down, and now we've tested that as support, and then we've moved higher from there. So when you look at it from a threshold on this point, is when you move this from the latest high that we've seen, the near term 38.2 is also in confluence with all of that at 363. So all of this level right here was pretty significant to break. And since it held at this point, some of the targets that I've had was based off this trend line break, just some measurements here, taking these two measurements in the same rate of change here. And the reason the arrows are shorter is because it's a log chart. So, it's the rate of change that you want to really look at. But the first arrow here and the second arrow are together, and the bottom one's about 450, and the top of it is about 487, which is a full retracement off of this 288 up to 487. So you got a full, once this broke right here at 141, the 487 comes into play. So 450 was my minimum target that I've been watching for. and then 487 is that top of that range. But another thing to keep in mind is if we keep momentum really strong to the upside here, then that second target is when you break this 38.2 longer term, which we just did, and it held as support right there, the 61.8% level long term comes into play as a second target, which is also the next extension, which is right in the middle of this next extension level. So anywhere between 540 to 570 is going to be that next level if this busts through and momentum just keeps kicking higher. And then, of course, if it breaks the 61.8% level, then we're looking all the way as a full retracement to 832. But right now, what I'm looking at is I'll probably trim some off at 450 or somewhere in this range. And keep an eye on some indicators. I'm not going to go into all in depth of the indicators right now, but what I wanted to show you was how the FIBs were in kind of confluence with each other, and showing that 450 is that possible near-term target, and maybe 570-ish on the top of that second target that's out there. So there's my ETH, and I know it's longer than a minute, but there you go.
Well, that's quite all right. And I'll take, I guess, another couple of minutes myself just to share my target. That my first target is right in line with your extension there. So I just wanted to show a quick horizontal. You're still on screen share.
You can take screen share as the host. You can take it from him.
I'm off.
I got that power. I got it like that.
Yeah.
I should.
I've got the power.
From now
Go
on.
ahead.
Shit, you doxing yourself?
Yeah, I think so.
I basically do it every week. You guys are gonna have to tell me why I shouldn't show up my desktop like that. Like it just doesn't. It's something that doesn't really bother me. It probably should. Okay. Quick look at where I'm going to be drawing my horizontals to start is just going to be based on the areas of weekly close, the kind of consolidation levels where price spent time. The more time price spends, the more time that an asset spends at a certain price, the more volume that occurred there, and the more built up support and resistance we can expect. And if we are to draw some horizontals, just based on, okay, so now Fibo mentioned that this was kind of important, breaking through this or something. Whatever he said, I felt was vastly understated because I was very, very bullish, very, very bearish altcoins, basically until Ethereum broke through this level and has now maintained it. I have flipped on a dime and in the last couple of weeks started buying a lot of alts, and it is primarily because of what I've seen out of ETH. Very, very impressive move to me. And if this was going to be a trap, for me, the trap occurs when it breaks through this high, but fails to break through this high. So if we had this big, nice move up where it smashed up to 325, 330, 340, I wasn't impressed at all. I was thinking that more likely than not that this is probably a trap. I did have some long exposure that was entirely hedged and was going to be not looking to maintain any long exposure unless we could break through this level. And when that happened, I took the loss on the short and capitalized on a little bit of profit on the long, and now we'll be letting the rest ride there, and did end up adding on this recent range as so just before I move on, I guess I'll probably end up spending more time than I thought, but whatever. So if we look at these horizontals, we've got 446 to 486 right now. Anybody that's stuck around this whole time and is still listening, I'll just go ahead and share with you the orders that I have set to sell are at 444, 474, 494, and I already had a trim filled at 417. So that was in case we kind of head fake to the top of the range and didn't break out. And now that we smashed through that, I'm very happy to have sold at a lower price because the majority of the position is holding on for the 444 to 494 range, and that is just what we went over right there. And if we were to pull up a fib, something I found very interesting that I will be keeping in the back of my mind is right here we have the 0.382 that I believe Fibo covered, and notice how on this bounce here, we resisted there near perfectly. And then here, not only did we try to break through, we closed above, and now we are turning it into support with wicks there. So that would make me think that we should get to 618, which is at 542. And as I mentioned, selling here, I wouldn't be exiting the full position. That would just be, continuing to trim. My goal would be, holding on to 20 to 40% and locking in a profitable position. So I will be looking for that as the next area. A lot of resistance we're coming into for sure. And this will be an area that I'm definitely looking to trim and take some profit, but I do have a bigger target in mind that I think, I'm feeling pretty good about, and that's going to be the 800 level based on one of the favorite patterns we recently talked about, and that is the big W. So this is now a confirmed big W. We've closed not once, so we've closed twice above this. Some people only need a wick above this. So for me, confirmed big W, and when the big W is confirmed, it is a target of a return to here, 830. So that is a confirmed target, and I don't think that we're going to do that. Instead, I'm going to be looking to sell something like that to potentially buy something like that. And if we do something like that, then excellent. I'll still have some exposure and a little bit more than the brief target I was planning on sharing. But I think that ETH is at a very, very important spot. I've been extremely bearish altcoins, and I am not going to be buying any altcoins unless I feel they're bullish against Bitcoin because they are riskier. And if I don't feel like they have more upside, then there's just zero reason to be in them. And now I am seeing quite a few alts that are bullish in my mind against Bitcoin. So I've been buying, and it's been fun to get a little piece of link and to try to figure out what may be the next one that makes some sort of move. It reminds me of years past that shopping for some really interesting things to put a very small amount of money in, and always make sure that I manage risk properly. Otherwise, it won't be any fun at all. So that's my input on Ethereum, and I guess we can sign off by all just sharing our thoughts on the space as a whole. I am very uninterested in Ethereum as an investment, and as a from a fundamental standpoint, I am never going to invest in that long term, and I am not going to think that it is going to go up for fundamental reasons or because it actually has value. But if the technicals are fundamental in anything, I don't care if it's Beanie Babies. If there's a market and I've got access to it and there's liquidity, I'm going to follow the technicals and the trend and try to ride the wave for as long as it's going. And that is my opinion on the whole altcoin situation, is that I think you need to be extremely careful. And if you are very good at managing risk and your main concern is protecting against the downside, then potentially you'll find yourself in some good situations with some good upside. But if you're just running around FOMOing, trying to get into the next one that just goes to the moon, you're going to have a very bad time. And I would strongly recommend you just stick to Bitcoin and stick to dollar cost averaging, and do not and know your limitations. Know what you're good at and know what you're not good at. And if you're good at managing risk and you're good at technical analysis and you're good at being patient and looking for the right spot, then I would say it's a good spot to go ahead and risk a little bit of money. And without rambling on too long, I am very interested in Ethereum and what we've been seeing out of it, and potentially it's telling me I'm wrong about the fundamentals. Maybe I am wrong, and as a technical analyst, I'm very willing to admit when I could be wrong. So thank you, Fibo, for not letting us forget to take a look at that, because the last thing I want to say is that ETH has been leading this last run. As much as I want to admit it or not, with the halving that had recently happened, Bitcoin followed Ethereum, and Ethereum smashed. Bitcoin went through 10K, but it did not keep up with Ethereum. And therefore, as I was looking for Bitcoin to break out of this range, I'm also looking for Ethereum to lead the run. And that's kind of what we're seeing, is that Ethereum did just break out, and now it's kind of, as long as this run's going, I think that that should continue to follow. And it'll just be one of the things I'm kind of looking at for confirmation. So thanks again, Fibo.
Hey, no problem. I just got a lot of requests for it, so I just want to throw it out there for people for sure.
Absolutely. And Joe, thanks again for joining. And I imagine you probably got a lot of requests for your barber. So if you want to give a shout out there, feel free.
Yeah, I'm happy to provide bald haircuts for Bitcoin. Just stop on by my shop.
and heal up, man, from all your motorcycle accidents.
And I take Lightning payments.
That's exactly right. And yeah, we've got tip jars in the description. So I would encourage anybody out there that has gained value from either Joe or Fibo to send them on over a little bit of tip money. It doesn't sound like Fibo needs a new disc, but I'm sure he'd like one. And it sounds like Joe could definitely use some more Bitcoin, like we all could. So that being said, we will go ahead and sign off. I appreciate everybody for tuning in. It's been a pleasure to chat with everybody. I'm learning right along with everybody else, and really appreciate Joe and Fibo taking the time to share their knowledge with us so generously. So thank you all for tuning in, and we will look forward to catching up with you next time.
Thank you again for
All
having
right,
us.
peace out.
All right. Thanks.